And this is MercadoLibre. The ticker is MELI. It's Argentinian based, but listed in the US. Fantastic business, Steve. Another fantastic report. The market liked it last I looked at it. I don't know how it finished. But yeah, growth across the board, Steve. Revenue came in at 5.9 billion. That was up 37%. Net income 494 million, up 44%. It's about 8% margin as well, and improving. Just over a billion in operating cash flow. That was actually down 32%, margin of about 17%, about 750 million of free cash flow. These are in dollars, by the way. That was down about 45%, a margin of 13%. Ad revenue was up 50%. That's FX neutral, so you can deduct away there as you see fit. Now, in terms of their actual departments, e-commerce net revenue was 3.3 billion. That's up 32%. E-commerce service revenue was 2.7 billion. That was up 27%. E-commerce product revenue was 0.6 of a billion, so 600 million, up about 64%. The fintech arm, 2.6 billion, up 43%. Financial services was 1.5 billion, up 39%. Credit, Mercado Credito, 1.1 billion, up 49%, and their product net revenue is about 13 million, which is a tiny part of the business, up 30%. But incredible growth, Steve, across every one of those numbers. So they gave some really interesting business metrics as well. So in their fintech, the monthly active users was up 31% to 64 million users. They reckon they've got about 67 million active buyers on the platform at the moment. That's up about 26%. Gross merchandise volume was up 17% to 13.3 billion. They said they sold 492 million items in the quarter, Steve. That was up 28%. Total payment volume, Steve, was up 43% to 58.3 billion. And total payment volume from acquiring was 40.3 billion, up 32%. Payment transactions, about 3.3 billion, up 38%. Active sellers using the credit platform was up 26.3%. One of the things that they were really trying to improve was same and next day shipments. That was up 25% to 143.3 million. Fintech AUM was 11.3 billion. That was only up 103%. Their credit portfolio now stands at 7.8 billion. That was up 75%. The NIMAL was 22.7%. So still pretty decent numbers. And their past due, which is debts that are 15 to 90 days overdue, 8.2%. And the ones that are over 90 days was up 18%. The ones that are under 15 days, which is called provision, 101%. And what we thought would probably happen with the credit and what they kind of thought would happen with the credit. It's a very difficult space because they don't have the huge amounts of information that these sort of developed Western countries have on each individual person. They don't have the credit history, so there is a lot more risk in this while you build it out. In terms of geography, Steve, Brazil was up 20%, but actually 41% if you're FX neutral. Mexico up 26%, but actually 51% if you're FX neutral. Argentina was up 125%, but actually 184% if you do FX neutral. The commerce division, 32%, but 57% if you're FX neutral. Fintech up 43%, but 73% if you're FX neutral. And in total, Meli grew by about 37%, but obviously 64% if you're FX neutral. So in terms of gross merchandise value, grew 10% in Brazil, 30% FX neutral, 2% in Mexico, 23% FX neutral, 77% or 126% FX neutral for Argentina, And in total, Melly grew at 17%, but actually 40% if you do FX neutral. So, and again, we'll just do the same on TPV, so total payment volume. So we said TPV total grew 43%, but it was actually 72% FX neutral. And the acquiring side grew 32%, but it was actually 59% FX neutral. So you'll know from your portfolios how FX has been affecting you. It is affecting South America, probably double as much as it's been affecting you. So yes, on the call they said that there was continued strong growth in e-commerce. They reckon they're outpacing major markets. Their first party sales were very strong. This was due to improved selection and price competitiveness. Their supermarket first party is performing well with better unit economics than third party, and they're benefiting from this advertising revenue that brought in that was very similar to sort of Amazon's, and that is also improving the margins. They think there's this huge long-term opportunity in fast-moving consumer goods in the e-commerce space just due to low penetration and this sort of positive halo effect on general merchandise sales. They don't see any significant impact from US tariffs, but they are closely watching TikTok shops in Brazil and Mexico, noting that these TikTok shops have a focus on low value items, but has a potential to bring new users online. So a threat and an opportunity potentially. The fintech Mercado Pago, attractive deposit rates are attracting and retaining users. It's actually positioning Melly, they say, as a leading digital bank. The credit portfolio, as we discussed, grew significantly. It was up about 75% year on year, with comfortable delinquency levels, as they described it. Argentina was the standout, more than doubling of US dollar revenues and strong profitability. And they reckon this is just due to the economic stabilization that's going on there at the moment. Delinquency rates in Argentina are the lowest due to unique market conditions. They want to launch a credit card in Argentina in the second half of the year, Steve. In Mexico, they saw more aggressive competition in pricing and financing. It's a more developed nation, so they should expect that. But Melly has identified and is addressing some selection issues that they had. In terms of Brazil, they said the credit portfolio is healthy and profitable and has low non-performing loan rates. The net interest margin, so that's your NIMAL rate, is moving lower due to a high share of lower risk credit cards and a move towards more affluent customers. That gives you lower risk, but also lower spreads as well. So a good move. In terms of the logistics, which is called Mercado Envios, CapEx activity remains on a similar path to previous years, with continued investment in fulfillment centers to meet anticipated demand. So realistically, what you're seeing here is essentially Amazon. The Amazon of now being built somewhere else. So the things that you're seeing, Amazon spend on Amazon trying to do, MercadoLibre are also doing. So look, the summary, if you want a summary, was that Melly is growing really, really strongly. In all of its core businesses, it seems it's taken quite a disciplined approach to credit risk. It is strategically investing in logistics and expansion of its logistics department. Argentina is doing very, very well. And the company has identified and is addressing competition in Mexico and new entrants like TikTok shops. So there's not really a lot, Steve, to be disappointed with here. I think we've made a horrendous mistake getting rid of this stock, Steve. I think this is going to be one of those things we're going to look at when it's $1 trillion company and be like, why were we so stupid? And the problem is, Steve, is that we're going to cover it every quarter up until then and just remind ourselves of our continued stupidity. Steve, why did you sell it?
I was trying to remember that while you were saying it. I've written down the number I bought it at, which was about a year ago, fraction more than that, maybe a year and a month ago. And I have also written down the number I sold it at, which was not an awful long time after. I led us on this one about a year ago, I think, in the reports, and I said, I'm going for this. And I wrote down a lot of good reasons why I was going for it. I now can't think what the good reasons I sold it for was. I suspect it's because I saw some other opportunity. I couldn't honestly tell you it's worked out better, mind you, because the stock is up 5% this week. I've no idea what that is, by the way, on an FX neutral basis, but it's up 5% in response to all that growth. And since I sold it, well, it's now at 24.10. I can tell you I bought it at an average of 1474. which would be great if I still had it. I don't still have it. I sold it at 1689, which is a long way short of where it is at the moment. And I can't remember why. I can't remember whether I got weirded by their massive inflation that they had going on, because we were talking about this, I think, probably about 6 to 9 months ago on one of those things where we were talking about their lending division. We were talking about net interest margins. You were reading them out to me. And these were nearly three-figure net interest margins, partly because interest rates were about 1,000,000% in the country at the time, and that was because they were dealing with basically quarterly inflation. Was considered to be bad in the UK, and it was genuinely bad in the UK, but that was about a month's worth of price changes for Argentina at the time. They were dealing with that 12 times over what the UK was dealing with, and the UK was justifiably thinking inflation's actually quite high at the moment. So I think probably something about that macroeconomic environment made me think, I've got another idea somewhere. I'm going to go and put this into my other idea. Couldn't honestly tell you what that other idea was. Be very surprised if it's worked out better than Mercado Libre, either from a stock perspective or from an underlying business perspective. Because yes, the stock has gone up, but it's not just about kind of punting which direction something's going to go in here. The fact is, this is a business that has grown very, very well and very, very impressively. And you make Amazon comparisons, and it feels like a lot of what we do here is, or at least a lot of what I do when I'm investing and how I think about things, is in terms of thinking about business models. And Amazon is one of the best at what it does. And we sort of see this elsewhere. And when we think about something like Wise, which is the payment processing thing, we think constantly driving down prices for customers, constantly widening the moat, constantly getting itself to a position where no one else can offer the same thing it can, and just making it harder for them to do that. Report in, report out for the moment. Let's not say day in, day out. Mercado Libre is doing that. There's a lot of very, very clear echoes of Amazon and that model about this. Like you said, 25% now up to same and next day delivery, for instance, which is something Amazon has been working really hard at. It's only a week ago, that we talked about Amazon's very impressive ability to get stuff to you before you've ordered it, basically up in Hull. And yeah, you see all of this happening with Mercado Libre. It's busy building an ecosystem. It's got services growth from its e-commerce business, which is now a significantly bigger part of that organization than the products growth. So you're starting to see margins in the right place as well. Revenues just keep going higher. Profits keep going higher. Its ability to expand in these countries is kind of incredible. I like the look of its credit business going forward because, as you say, the data is not really available at the moment to support this, so it's a naturally riskier proposition, but it is coming. I know Experian are busy trying to set up a strong presence in Brazil, and that will help. No doubt they'll find competition out there, but things like credit checks and backgrounds and so on are rapidly making their way into that part of a quote-unquote emerging market. I guess to say it's unique market conditions in Argentina, which is what you call them, I think you may have been talking from their perspective as well. It's probably a bit of an understatement, but yes, I sold it, and I don't know why. I do remember that I sold it. I keep having in my head this idea it's going to come back to 1600, which is the number that we saw it at in the kind of when we very, very first started looking at this, which is sort of think pandemic time. At that point, it was kind of making its way up through 1600 and heading to about these levels in what was clearly bubble territory, as everyone was shutting their houses and ordering everything online, including in South America. And it made its way back down to what you might call a more normal trend line, or a more accurate reflection of its current earnings rather than its future ones. But since those earnings have just kept going higher, never say never in the stock market. Weird things do happen, but I'm not sure what derails the business back to where it was at a point where you would say 1600 is about the right number for this. Market might get worried about the stock and so on, but I think at 1600 you'd have to say this was now looking very cheap, and I'm going to have to give up on the idea that it's going to head back there because it always has.
So for anybody just listening, when Steve started talking about the prices that he bought and sold it, I decided I would have a quick look. And for a brief minute or so, I had an existential crisis about seeing the prices I bought it at. So I was buying this back in 2020, Steve, for $862 and selling it, Steve, for $943, feeling like one of the smartest men alive. But that's not the only time I've bought and sold it. I bought it in October, and I bought it for 1,066, and I sold it only a month later for 127,195. Now I netted 500 quid on that trade, Steve, but that's all it was, I'm afraid. But then I bought it back, Steve, and sold it for 15.55, netting myself a cool 90 quid, which is still a terrible move. And then the last time I ever had a stab at it, I bought it at 802.26 in May 2022, which would have been the buy of a lifetime, except the fact that I sold it, Steve, for $910 and then oddly for $826. And now looking at this, I want to absolutely just give up and just never look at this again. Like if this was a part of my history that I could just wipe from, it would be this. That has made me feel awful.
You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.